This is the Bill Meyer Show, 635. Glad you're here. Jay Taylor joins me. And Jay Taylor is an interesting individual, former banker and value investor, and his picks performing pretty well here, too. You'll find out more on Jay Taylor's. It's actually miningstocks.com. You're an editor there. And by the way, Jay, welcome to the program, first off. Good morning, sir.
Thank you. It's good to be with you.
All right. So, what is the? Do you print a newsletter also, or a newsletter or advisory?
Yeah, we still do send some out to some of the senior citizens, let's say, that aren't used to using the internet. But it's largely an internet service and a weekly service that is only by internet.
All right. Is that Taylor Hard Money Advisors that you're talking about there?
Yes, that's correct. Miningstocks.com is the best place to go to follow what I do.
Boy, there's a lot going on there, too. Wanted to get your opinion on something. You know, in the talk radio world, a lot of the commercials, for years now have been talking about, gee, buy gold, buy silver, hedge against inflation and all the rest of it. And it would seem that over the last few months, though, it's been relatively sleepy. Would you agree, first off?
Oh, yeah, I would agree. But, I take a long-term view of gold and what's going on in the economy. And I think the case for gold is very, very strong. Actually, I'm glad to see some sideways movement now for quite a few months in the gold markets.
Why is that?
It's probably gotten ahead of itself. Why is that?
Yeah.
Well, I think gold had gotten ahead of itself quite a bit, and like any market, if something goes parabolic, it's probably about over. And so I've taken a bullish view on gold, and I think the fundamentals are very, very strong for gold. As long as policymakers keep doing what they're doing, essentially, which is trying to defy Mother Nature, trying to defy reality, trying to print money to wash away the sins of the past, essentially. And what people have to realize is that since 1971 we don't have an asset-backed system. It's a liability-backed monetary system. So debt is really the raw material from which money is created. When you go out and take a car loan, you've done your part to increase the money supply through the fractional reserve banking system. You have actually increased the money supply. And so Bernanke, since Lehman Brothers especially, but long before that, since 1971, more and more, we've been printing money to finance our war efforts overseas, to finance socialism in America, and we've been moving more and more in that direction, and we're not paying for what we're consuming. And so we've gotten ourselves, and the whole world is in debt to such a great extent. The debt to income is so high for the global economy, and the only thing that the policymakers know, the only thing they've been taught in the universities, is that they have to keep printing more money. And by printing, I mean it's not really printing. That the money that we carry around in our pockets is a minuscule portion of the total amount of money supply. Most of it is digital money. So Mr. Bernanke decides he's going to just put money into the banks. And now the banks have money, and they have to lend it out, or they have to try to lend it out. The problem they're having is they can't find credit-worthy borrowers. The point I'm making is that our economy is so messed up now. It is so... We've gotten away from free market economics for so many years that the problems that we have and the amount and what has to happen before we go back to normalcy is so far out of whack that that like a drug addict who needs more heroin, he's going to keep taking more and more until he dies. And that's the path we're on. And this is very, very bullish for gold because they're in the process of destroying the fiat money system. I guess that's the short answer.
Now, in all fairness, though, isn't every currency that every government has in the world right now fiat currency? And and isn't the goal always to destroy itself, but just to kind of destroy it at a controlled rate? Isn't that really what the central bank's trying to do?
I think, and that's the best we can hope for, is that somehow this comes to some sort of a peaceful, quiet tranquility back to honest money again. And you're right. And for that reason, I'm not nearly as bearish on the dollar as a lot of my gold bug friends are. In fact, I'm more of a deflationist. I think that I think the dollar could be the strongest of all of the fiat currencies for quite a while. And that's sort of a complicated argument, but part of it has to do with the dollar has the most debt in it. So when the system has to go into reverse, like we did after Lehman Brothers, when debts have to be repaid, the dollar got stronger, and asset prices went down. And the dollar got stronger because the dollar has the most debt. It's like when the debt has to be repaid, people have to sell things that they don't necessarily want to sell, but they have to pay the margin clerk, they have to pay the banker. And so when they sell those things, it forces the price down. It means the currency's purchasing power goes up. And since the dollar is the world's reserve currency, it has the most debt attached to it. So when the system goes into reverse, when the global monetary system goes into reverse, the dollar gets stronger. We've seen that happen after Lehman Brothers, and I think there's reason to believe that we have to wring a whole lot of debt out of the system relative to income, and that process could make the dollar the strongest of the paper currencies or the fiat. The currencies that we use, not because the markets have chosen them. The market hasn't chosen the dollar. The market has chosen gold and silver, but we're not allowed to use gold and silver. We're forced to use paper money. That is fiat by law. And that's what all the nations, as you point out rightfully, all the nations are on a fiat currency system, and I think the dollar could be the least worst of all of those fiat currency systems. So I'm sort of bullish on the dollar short term, maybe for quite a few years to come yet.
Jay, I'm really glad to hear that, because many folks that I've talked to about gold are saying, "Oh, the dollar is going to be toilet paper," and I would counter with kind of what you're saying. It's just like, listen, there are more U.S. dollars because it's been that we've had that privilege for so many years. Since World War II, end of World War II,
right.
Really, that we've been able to fill the world, and the world has used the dollar for a lot of commerce, and so it can stay crazy with our dollar there for much, much longer than the doom and gloomers are saying. So I'm glad you brought that up, but what do you think is the ultimate end game?
Well, the ultimate end game, I think, is a massive deflation, and that's why, like Peter Schiff and people like that who are arguing the dollar is going to be toilet paper, the hyperinflationists, well, I don't agree with them. Also, one of the things that gives the United States and the dollar the strength it has is our mighty military, because there's no question in my mind that many of the wars that we're involved in has to do with trying to enforce our dollar power and the use of dollars, continued use of dollars. I mean, I think one of the main reasons we went to Iraq had to do with Saddam deciding he didn't want to, he sort of gave the finger to the United States and said, we want to get paid in euros. We don't want your dollars. And it was a slap in the face to the United States. We didn't like that very much, and we didn't want that trend to start because we want to be able to keep printing money and being able to print money and use that to buy goods and services from overseas.
Okay, now take
our military is a part of the story, too.
Okay, agreed. Now, then take this story, which is developing over in Iran. I've been saying that we're seeing a Saddam Hussein-type hysteria building over Iran because Iran, of course, is trying to sell the gold and then sell their oil, rather. And the United States, under the guise of, they're a rogue nation, we're going to cut them out of the international financial system. And so they're trying to sell their oil for whatever they can get, whether it's euros. They've talked about gold with India and all the rest of it. And so you could just about bake a war in the cake for Iran for much the same reason as Saddam. Would you agree?
Absolutely. I couldn't have agreed with you more. I think that's exactly what's going on. I think it's all economic. It has nothing to do with American security. It has to do with economic power and the domination of that area over there. And it's very interesting the way we're trying to seal off Iran. We're taking away a payment system from Iran, and we've gotten the rest of the world to support us in that. So now Iran is left with almost having to barter. India and China want that oil from Iran, and I have to think that Russia will side with those two countries as well. So I think it's a very dangerous situation over there, in my view, from what I can understand. And I think probably one of the reasons that certainly Obama doesn't want to see higher oil prices. Now we're seeing the Saudis, though, come out and say oil prices are too high. I'm sure we're putting some pressure on the Saudis to start to let out more oil to make up for, in case we go to war, and that's cut off. So I think the last thing that Obama wants to see is a rising oil price in an election year. But I think that's what it's all about. And this is why I agree with Ron Paul to a great extent in terms of our foreign policy, is because I think that we should be telling Americans the honest truth about why we're fighting wars rather than some more false noble cause. It's about economics. But that said, as an investor, I got to look at the reality of it. And the United States military, I think, is a very big part of the strong dollar policy. And the U.S. is the world's dominant superpower right now. There's nobody else that can compare with us at this point in history.
So you still have to look at it as you still have to look at this then as the dollar actually could be strengthening, which would actually be good news if you wanted to add to your portfolio of, let's say, precious metals and commodities and things like that, because that would actually lower their price, like we've seen with gold and silver as of late.
Well, yeah, it could lower the price in the interim. I think that's part of what's going on now. Clearly, the dollar has gotten stronger, and gold and silver and other other commodities have weakened some. But longer term, though, still the world is still opting for currency as opposed to paper money. So I think two things are happening. I think within an overall destruction of the fiat money system, which I think maybe takes many more years yet. I don't know how long. I don't know. Mm-hmm. But I think that's happening. And the U.S., of course, is fighting the deflation with more inflation, too. So it's, there's countervailing pressures here. The U.S. Bernanke is fighting this deflation, trying to pump huge amounts of money into the system. So everybody's trying to cheapen their currency to get an advantage also in international trade. But the U.S. has the advantage of being able to tell countries, to do what we tell you to, or you're going to have some trouble. I think one of the reasons also that we don't want Iran to have the nuclear bomb is because that would then give them a defense capability of keeping us out. I mean, we don't attack countries that have nuclear weapons.
Well, we don't mess with North Korea now. Yet, no. North Korea was an earlier Hitler. Oh my gosh! Look, right. what are we going to do about North Korea? Well, you have to leave them alone once the nukes are there, right?
Right. And aside from economics, let me just say that I am very concerned about the National Defense Authorization Act, which allows the President of the United States essentially to decide, those of us who decide who might be a terrorist, without any oversight. And to me, my fear is that America's giving up the potential. America's giving up what we have been. The idea that people can be accused without having any defense, to me, is indefensible from our country, and I think puts us on a very slippery slope. I'm very, very concerned about that. I mean, that's not directly economics, but I'm thinking about how in Argentina, was it during the 80s, when the military junta would take people, seize people off the streets, put them in airplanes, drug them up, and throw them out into the Atlantic Ocean. I'm not saying that's going to happen in America, but let's just say that the president, whoever he is, Democrat or Republican, can decide who an enemy of the state is without anybody having an attempt to protect themselves. I would see Ron Paul as an enemy of the state, quite frankly, because he wants to do away with the Federal Reserve.
But, Jay, we would handle dictatorships differently because it'd be an American dictatorship. It'd be better.
Well, yeah, it would be our dictator, right? The problem with that argument is that, the Democrats are happy to have Obama have that kind of power, but what if Obama is thrown out and a Romney comes in? And the thing is that whoever takes over as president isn't going to relinquish that power because I'm the good guy, he figures. So I'm really concerned about this in America. I mean, this isn't an economic issue, but it's an issue that hits me really in my gut really hard.
But I think it does tie into economics, Jay. By the way, we're speaking with Jay Taylor. Jay Taylor is the president of Taylor Hard Money Advisors. He's the editor of miningstocks.com. You can read all about it. Real easy website to get to and to go through. But, listen, I was hearing Rick Santorum and Mitt Romney after yesterday's primaries in Illinois talking about how the focus is on freedom. And
yes.
And they're absolutely right to focus on freedom. Freedom is what made America great, is what made America prosperous, the ability to trade and contract and do, what you could and work within your own best interest. And I'm talking about everybody from the highest CEO person down to just a regular schmo just going to work every day like, me and you, as it were.
Sure.
But what concerns me is the structure, the whole structure in D.C., has nothing to do with freedom.
Yeah, I would agree with that. In fact, the more and more government we have, the less freedom we have. And if a Rick Santorum were to become president, would he give up that power that the president has just been granted through the National Defense Authorization Act? I have my doubts because people. I think Ron Paul would, but I think that's why he won't become president because the ruling elite or the people that are, let's say, the mainstream, the status quo, want to keep what they have, and that's really what we have. And I think, this is why free markets are so important because they're democratic, more so than anything else. And when you start getting governments meddling in the economy, then you take away the market forces and you make political decisions.
And of course, the most political decision we have right now is the cost of money, which is controlled once again by the government and the private bankers. All right.
Absolutely.
All right. Very interesting. So where do you see? I see actually a potentially calm 2012. economically for much the reasons as you described. Even though the rest of the world is going to hell in a handbasket, we have a lot of dollars in circulation. We can inflate a lot more than the rest of them and get away with it. You agree?
Yeah, I think that's right for a while, and I think that's what's going on. I mean, I think it's the least worst place to be right now, investment-wise, probably is in the United States. But that said, I think that this bull market is long in the tooth, and I think I'm very concerned. In fact, I put out a very rare alert to my subscribers last week suggesting they sell 75% of their equities and build cash. We're holding a lot of gold and silver. We're holding a couple of short positions in the market, but mostly I'm suggesting that people should build cash because I think this equity market could go down pretty hard. I'm worried about it. I don't know if it's going to happen this year or late this year, possibly in the fall. But you know, I'm concerned, and I'm actually doubly concerned today when I hear Goldman Sachs coming out on Bloomberg here in New York City. I heard them talking about how they think that that we're going to have a bull market for the next number of years. I sort of hearken back to Abby Joseph Cohen in the late 90s and then through the 2000s talking about how everybody should be, you know, constantly week in and week out, how everybody should be buying the Fortune or the S&P 500. So I think that you got to sort of follow what people are saying, what the mainstream is doing, not what they're saying. And the same goes with the Federal Reserve, and the same goes with politicians too. You know, words are cheap, but what are they really doing is really what matters.
Yeah, it makes a lot of sense here, Jay. Is it time to short Apple, to actually bet that Apple's going down?
You know, I'm not in a position to say that because I don't really follow the tech sector that much, and it's too expensive for me to buy it. That's for sure. I'm not going to buy that stock right now. But I don't follow. I mean, I'm more into the resource sector, so I don't have a strong opinion on Apple. But you sort of look at that thing, the way it's taken off, and you say, you know, it could be getting frothy. And, you know, I heard some, you know, pretty seasoned, usually normally bullish analyst in New York suggesting that. So, you know, it could be.
And yet Apple is such a part of so many mutual funds. It's like everybody, well, if you're going to be sensible, you have to have Apple, right?
Right. Well, exactly. And so that may be why it's vulnerable, you know. And everybody has almost everybody has an Apple product or so. And how many more people are there out there to buy more Apple? I don't know. It's a great product. I mean, we got to be thankful. It's one of, you know, technology is certainly something that's making America, still keeps America up there and keeps us, keeps us alive for sure.
Jay Taylor, president of Taylor Hard Money Advisors. I'm going to squeeze in one question here. Don, I'm sorry that kept you on hold there for a while, but I just love talking with Jay. Go ahead.
Yeah, very interesting. Jay, how much of America does China own? And I mean, how much land, how much real property, how much of the gold, the silver, the politicians?
Well, it's interesting. Yeah. Like how much exposure are we really faced with China?
And I can, you know, if you take all those things into account, the real property, land, politicians, gold, silver, I'll just listen to your answer, okay?
Okay, appreciate that. Thanks, Don.
Yeah, sure. I'm not so concerned about China as I am about the big multinational corporations that I think really are behind the power of policy makers internationally. And my concern, to a certain extent, is to what extent will Goldman Sachs get their tentacles into China and start calling policy there? You know, what I'm worried about is a one-world government, honestly, and I see that as a growing danger. I hear what you're saying. You know, we are a net debtor nation, so other countries are owning us. But I think the Chinese are saying we don't really want more. We don't want more dollars. We might want more assets. But I think China is focusing more on Africa and places where they can sort of strong arm their way into getting what they want. I think they have a tougher time in the U.S. We were concerned about the Japanese, of course, at one time. They owned Rockefeller Center in New York, and they were buying golf courses and owning more.
Boy,
and more
look at him now.
America.
Whoa.
And now, look at him now. Yeah, so, you know, I think that China is paying more attention elsewhere in the U.S. You know, they tried to make a run at some Canadian corporations and some U.S. corporations, and you know, we didn't allow them in certain places. So I think the Chinese are, you know, if I were African, I'd be more worried about the Chinese coming in and running my country than I am right now in the U.S. I mean, it's the reverse that I'm somewhat concerned about. You know, we were talking about this power of, you know, the sort of geopolitical stuff that's going on now with China and, you know, China and India trying to get their oil from Iran. You know, I think there's a big global geopolitical thing coming up here between. You can sort of see where the lines are drawn: China, India, Russia, and you've got Venezuela over here, Iran for sure, Syria, which is part of that alliance. And so, I don't really know. I'm not really that concerned about the Chinese owning America at this point in time.
That's really interesting. That's it's kind of cutting against the grain for many. I appreciate your thoughts on that, Jay. We'll link to all your information. Great website. It's miningstocks.com. That's pretty darn easy. And Jay Taylor, president of Taylor Hard Money Advisors. We appreciate you being on the show this morning. Thanks again.
Thanks. It's been good to be with you.
All right, take a look at that. Some great reading.